Hey traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for May 21st, 2023. I hope you guys and gals are having a great weekend. We have a lot to discuss, a lot of key developments that are happening in the markets. A little false breakout in the upside in equities. Yen pairs starting to worry me a little bit, and a lot of events happening this next week. So make sure you all stick around. We've got so much to talk about. Let's get into it. And I want to say, like, when I'm going into the charts really quick, by the way, you know, when we go through Forex Analytics and you're looking at these charts, you can get live charts right through here, through the platform. But I want to give you a full view rather than a smaller view here. So I'm going to actually use this full screen. Plus, you know, I drew on these charts from last week, so we'll you know, discuss some of these things that are happening now. I do want to mention though, I'm not sure why some of the data is not here on my charts. I'm sure it's because maybe weekend server issues. It doesn't really matter because all the prices there. What had happened this last week, especially on Friday. So that's all that's really most important. So let's get to it and let's talk about like some of the things that are really happening. Now, first and foremost, we want to talk about like some of the events that are happening this next week. So Monday is going to be a pretty light day. There's not a whole lot happening on Monday, but if you go out to Tuesday, there's like the PMIs from the Eurozone, from France, I think German PMIs, and then later that day is going to be the US PMIs. And so I'm going to take you over to the Euro, and let's just kind of discuss this. Now, if you follow along during the face shows, and by the way, if you don't know where the face shows are, they are, here, let me just show you really quick. If you're on Forex Analytics, well, first of all, you can go down and find the link just down below at the very bottom of the YouTube video if you're watching that. But if you're on the Forex Analytics website, just go over to where it says webinars. You'll see it right here at the very top of forexanalytics.com, right? If you're just on our website, go over to webinars. If you are in the European time zone and you can watch the flow show, do it. I'm sleeping during those hours, but watching it with you know, Ryan Littlestone, K-Man, and Stelios, he joins there pretty much every day. Make sure you're there listening to the team, and then the face show is the one that I'm going to be on with the rest of our team. And so just click one of these buttons to register if you haven't done so already. But if you're listening to the face show, then you're going to already know that the euro dollar completed its patterns, all of its downside patterns last week. We had this triple top, double top, whatever you want to call it, range extension. It pretty much completed. We had a bear flag pattern. Here, let me draw that for you just so you can kind of see it. These are things we all talked about last week live every day. So you can see the flag pattern did complete. And once we completed, and we talked a lot about this in the Forex Analytics chat room, it gave the ability for the euro dollar to recover. And we recovered basically to 108, you know, 108.20. My opinion is while we're below 108.50, there's still more work to do. So if you're looking at the euro and you're thinking about next week, like the Eurozone PMIs, and by the way, just so you guys can see it too, just make sure you guys, I want you to all view that. There's a 618 retracement that has remained untouched thus far. However, I still think that that's doable. And matter of fact, I believe that we can even go further than that. If you look at the daily charts in the euro, the 200-day moving average comes in right around by the time we get there, it's going to come in right around 105. I'm going to say roughly. And if you listen to the analysis last week, you know, here's the weekly show from last week. If you're talking about, we were talking about the dollar, you can just go ahead and, you know, go back to the video and watch what I discussed last week. You know, looking for an eventual move to the 618 and maybe to the 200-day moving average. So I do believe that the dollar index has some further room to run in this rally. Now, if you think about what's happening around us, we have debt ceiling negotiations. Matter of fact, Speaker of the House McCarthy, he said that the talks are basically dead in the water till President Biden gets back from the G7, which will be tomorrow. Well, tomorrow, where I'm at right now, but when you're watching this, probably today, getting back from the G7 meeting. So those negotiations are going to continue. Remember, a lot of Congress is on break or, so they're going to have to bring people back to make sure they vote some sort of debt ceiling raised through this week. Regardless, it's probably going to get done. You're going to see a continued relief rally in the dollar, I would assume. And there's other reasons why the dollar could rally too, whether you're talking about risk aversion, which we can talk about here in a few moments. But the dollar still looks like it's on the road to recovery. Remember, everybody was really bearish. We talked about this last week on the video, on the week ahead video here. Isn't that weird? That's me and me, me and me. Let me get rid of me. There, I'm gone. Okay, so if you remember last week when we talked about the debt ceiling and about the market being extremely bearish sentiment, the dollar. Well, the dollar has continued to recover, and I believe that you had Stan Druckenmiller. He was really bearish the dollar, literally at the bottom, and we've seen this reversal. I think the whole market was really positioned poorly. Anyway, I still believe that this is a bearish consolidation in the dollar that you're seeing here, but that consolidation can go a lot longer than you think. And by the way, this is right here, and let me remove all this. Just in case you forgot or you do not know, this from here to here, right at the top of this level right here, that's the 38% retracement. I still believe that we're going to be capped by that. Now, that doesn't mean that the dollar can't rally through that level. There's a lot of things that would have to happen. One of them predominantly would be a little bit of risk aversion in the market, and obviously that is not what we've seen as of late. All right, so speaking of things, let's continue on with other things that are happening. We have the U.S. Manufacturing and Services PMI. It's not ISM, but it's actually the S&P PMIs that are coming out on Tuesday morning. So that could be a market mover for the dollar, something to think about. Also, what's happening later on in Tuesday, and let me delete this is from last week. We drew all this stuff. Next Tuesday evening, which will be Wednesday morning, in New Zealand, we have the RBNZ rate decision. Now, the RBNZ is expected to raise rates to 5.5%, another 0.25%. Will they? Will it be a dovish hike? See, these are all the questions that we're asking, and I got to tell you, the thing about the Kiwi is it has really overperformed. You can see it in the Aussie New Zealand. The Aussie New Zealand continues to break down, or has broken down, gotten fairly low to some key support this week. So obviously that could be something that we pay attention to going into this next week. But with the RBNZ, I think that you still still sell a failure at the 618 retracement, which is basically 63.70. So any move close to that, I'm actually looking to sell the New Zealand dollar. So I hope it's a one and done type of situation, or in other words, we have a dovish hike and the market takes note of that. We spike up and then roll back over. So that's going to be the Kiwi going into this next week. Also, what's happening on, it's Tuesday. Well, for me, it's like late Tuesday night. You can just say it's really Wednesday morning. We're going to have the UK CPI. And so that's something that could be a really big market mover. We were talking about the cable, this channel, we broke through channel support. We're kind of bounced back. We're right at the 50 DMA. You can see that the 50 DMA is a really good trend moving average. A lot of institutions, they'll use the 50 DMA, as kind of an indicator. Like, I'm going to stay long as we're above the 50 DMA. I'm going to get short below the 50 DMA. That's like a very common theme amongst a lot of portfolio managers, and the 50 DMA is held, and you can see it's relatively good in its performance depending on what asset class you're looking at. Anyway, that's not the point here. The point that I want to bring is, you'll notice this red line, right? That red line was if you connected these highs to this high through here, and we talked about this being a breakout, and then we came back, basically tested that red line, tested it, held it really for all intents and purpose. It's late in the day for me, guys, so bear with me, and it's the weekend. So anyway, I just think that this is all really key support. Now we start getting below 124. I think if you're bullish, you got to, start being very careful being bullish, because longer term, whether you're talking about monthly, weekly charts, you start getting in a false breakout territory. You start getting below 124 in the sterling. And just keep it in mind with the cable, it is inflation data, and inflation data is very, very important to not only the Bank of England, but also to the world. Everybody's watching to see if we start to get some disinflationary pressures in the UK. I know if you live in the UK, God, I'm praying for you that does happen, because you guys have been dealing with some pretty strong, inflationary pressures as a whole this last year. So anyway, one of the other things that's happening on Wednesday, let's take a look at the dollar index again. We have the FOMC meeting minutes. Now, why do the meeting minutes matter? Because I think we got to start listening to some of these Fed governors now that rates we're really close to a terminal rate. We're getting to that point where, is the Fed going to be raising one more hike? Are they going to keep rates unchanged? Where's the rates market? What's being priced in? Which we're really kind of close, on the verge, if you will. But you got to start listening to credit or conditions, financial conditions. Are they tightening? If you start hearing a lot of the Fed governors talking about those tightening financial conditions, that's going to tell us that maybe the Fed is done raising rates. And so therefore, the dollar might wobble around these levels. But keep that in mind. That could be a market mover come Wednesday. What else is happening this week? Well, we have unemployment claims. We have preliminary GDP also on Thursday. So after we get past Wednesday, Thursday, GDP, preliminary GDP, unemployment claims in the U.S. Then on Thursday night or Friday morning, and we should talk about this because I want to talk a little bit about the yen. We have Tokyo CPI. Now, Japan CPI was released last week. Didn't move the needle at all. Tokyo core CPI will be released on May. It's May basically 26th in the morning in Japan. So it'd be late night or later in the evening, for those of us in North America. We're going to be paying pretty close attention to the CPI. Market's expecting a bit of a downtick, but if we don't get that, then this little false breakout that we saw here at the very end of the week on the US dollar, Japanese yen, we're going to have to start paying a little bit closer attention to it. Matter of fact, I'd like to, let me mention a couple of things before I actually start looking at some of the other yen pairs. We do have PCE on Friday. It's even though as consumers or most people just listen to the CPI data that's being released, the Fed's favorite inflation gauge is the PCE data. So that will be a market mover on Friday. So make sure you guys mark that down for your calendars. But I want to take a look at some of these yen pairs because we had the dollar yen broke above 138, and I think this was far enough to really trigger stops. For people that have been short the yen pairs, they got stopped out. If you were listening to the trade-off that I did with Chris Weston on Thursday, and I got long a lot of these yen pairs, or excuse me, not all these yen pairs. The dollar yen, I closed out of my other yen pairs that were a loss, but I got pretty aggressive on this breakout. And if you're in the Forex Analytics chat room, you'll know that I actually closed everything out. And this is some trades on Friday. I took actually a few little losses just trying to scalp around on Friday. But you'll see right here, if you look at this is the trades room. I'm going to have to get to it. Let me see if I can find it. I picked up some dollar yen long on Thursday. All right. And then you can see I closed, all of my, there's added a little bit more. And no, that was actually on Friday. I have to even go back further. These are a chronological order. What myself and the rest of the team. Anyway, I don't have to go through all that. This is the Forex Analytics chat room, by the way. If you want to know where I'm at most of the day, you guys should check it out. Anyway, I got in the dollar yen right through here, sold it like literally a couple pips off the highs, and then I was actually reestablishing some longs down here on Friday, kind of trading around that. But the point I want to make here is this weekly chart It's a bit of a false breakout. And so I think that we're going to have to pay really close attention to the dollar yen and the price action this week between that CPI data, the PCE data at the end of the week, ongoing debt ceiling negotiations. I'd like to see where this dollar yen closes this next week. I am overall, just so you all know, and it's something that most people that listen to my analysis throughout the course of the week know that I'm more of a yen bull than a yen bear. That means I expect the dollar yen and other yen pairs to go down, especially once we see a little risk aversion. But the fact of the matter is we haven't seen that. So we've seen the dollar yen continue to rally. We've seen all other yen pairs as well. Now notice that some of these other yen pairs have hit some pretty key resistance, like the euro yen back at that false break, the scene of the crime, if you will. This is a false breakout area, right? So we're just back retesting 150. I think you got to be really careful being on the long side while you're below 150. You look at the sterling yen. This is on the verge of a breakout. How many people are short the guppy? This thing's probably looks like it's going to continue to rip higher. So some mixed signals. Aussie yen, it's at the 50% retracement. I would be a little nervous being long the Aussie yen while you're below that 50% retracement. You can see it right here. And also the 200-day moving average. Notice how we closed below it to the end of the week. That's something that's worth noting if you're trading the Aussie yen. The Kiwi yen, you look out longer term, like this is basically all of 2022 and obviously into this year as well. These are levels that tend to get sold. We're into that levels that tend to get sold. So if you're long the Kiwi yen, keeping in mind the RBNZ is this week, this is one of those that, hey, if you start to see the Kiwi fail, the Kiwi yen's probably not a bad short up at these levels. At least you know your risk. And when we trade, that's the most important thing, is knowing your risk. Speaking of knowing your risk, if you haven't checked out the trader funding program, make sure you check it out. The reason why I say that is because we've laxed the rules for new assessments. That means if you're taking an assessment, you want to trade our money, you don't want to risk your own money, but you want to risk our money. We've actually made it easier for you to pass an assessment. We give you a 6% trailing drawdown maximum. And all you have to do is make 10%. Make 10%, can't risk more than 6%. And if you do that, there's a couple other little rules out there, like intraday, you can't lose more than 5%, I think, of what it is. This way we know that you're not risking a whole lot intraday. Grind it out. I think you guys and gals can do it. Look, I pass an assessment myself. If you want to know how I pass an assessment, click down below and watch the video of how I did it. And I did it when the rules were stricter. Now they're more lax. Plus, if you want, you can qualify to keep 90% of the returns. Now, the original one is 75% of the returns, but you can also elect to make more at the very beginning on new assessments. So make sure you check out the trader funding program. This is a great way where you don't have to risk your money. You can risk our money. You do have to take an assessment, check it out. And then while you're doing that, you can be inside the Forex analytics community. So you can see what I'm doing. You can see what other traders are doing. And this way you have other people to just talk to about the markets. So you're not on your own. We want you to be in our community while you're trading our money. So there you go. All right. So going back to, let's actually get back to the markets. Let's get back to the yen pairs. I want to do one last one, the Canadian yen here. The Canadian yen's faltering around the 50% retracement. I would say that this is a strong resistance zone that you see of the Canadian yen. Also, just eyeballing it, this looks like we might be developing some sort of an ascending wedge here. So just think about that if you're trading the Canadian. The reason why I also mention that is if you look at the dollar Canadian is in a triangle. We're at the upper end of the triangle. So if we break higher above here, above this resistance, well, guess what? If the Canadian yen breaks up here and we do develop this Gartley pattern, this right here would lead to this. Oops, wrong one. This right here. So with an ascending wedge developing in the Canadian yen and obviously with the US dollar Canadian, you know, in a bit of a triangle, keep your eye on the Canadian pairs. Not a lot of Canadian data coming out next week. There's some, but not anything that's jumping out at me. We're going to continue on with our analysis. We're going to look at a couple other markets. Let's take a look at gold. Gold finally broke down its channel. We were talking about that real risk of gold. Now, notice how we closed below the 50 DMA. Notice how we had 2 days below the 50 DMA. We are pivotal support right here. It comes in at 1960. A break or daily close below like 1955 is going to be extremely bearish for the gold market. And I'm just looking at that, knowing that, you know, with the gold market, if you see the gold market come under pressure, what do you think is going to be moving higher if gold is moving lower? Do you know? Do you? Well, I would say if the gold is moving lower, that means the dollar index is probably breaking higher. So just keep that in mind, okay? So we got gold is breaking down a little bit. Now, I also want to talk a little bit about yields. Look at the 10-year yield. And this is a very strongly correlated move to the US dollar Japanese yen. We had a nice little bull flag trying to develop it, but I'm going to give you the buts. Okay. You have a rejection of resistance right here. Right? Now, if the 10-year yield is rejecting this resistance and you take a look at the Nikkei, oh wait, am I talking about the Nikkei right now? Yes, I am. You talk about the Nikkei, you go out to the weekly charts and you look at that resistance. If the Nikkei stops here and the 10-year also stops somewhere around here, well, that would suggest to me that the dollar yen is really going to struggle right around these levels. Now, remember, we are false breakout possible in the dollar yen, also above the 200-day moving average. We drop below the 200-day moving average. That could open up some downside. All right. I also wanted to mention really quick, I want to talk about the US dollar Mexican peso. Even though Banxico didn't really move the needle, the fact of the matter is the dollar Mexican peso is pivoting off of some very key channel support. We talked about it last week about it being a little oversold. RSI was divergent. And that RSI divergence had led us to a rally as we expected this last week. Again, if you want to watch the week ahead video from last week, just find the, you notice that there's chapters here. Just go see what I had to say about the Banxico and the dollar Mexican peso last week, right? If you go and you just look at the dollar Mexican peso and Banxico and the divergent relative strength, the risk was that we were at the 127% extension is that we were going to see a bounce. And we got the bounce. Now, here's where the risk, this is real time now, but this is where the risk starts to take hold, is if you get back above 1790 or 18, then you start a squeeze. Now, that typically coincides with equity markets moving lower. So if you see emerging market weakness, especially in the Mexican peso, that could suggest that the S&P is under pressure. Now, I'm going to go talk about the S&P in just 1 minute, but I want to bring up one last thing. If you guys did not see it, the US dollar South African rand, we also talked about this at the end of last week's week ahead video. We closed in breakout territory at all-time highs. Now, just so you all know, that cup and handle pattern goes a lot higher. Trendline resistance comes in around 2050. I have take profits up at these levels, guys, you know, as we get to this upper trend line, but this could really take off. There's a lot of things working against the South African rand at the moment. So if you don't know what they are, come join us on the daily shows, and we'll talk all about it on the Flow show and on the Face show, because both myself and K-Man, we tend to, well, first of all, we're all short the rand, so we're riding this wild horse higher. But we talk about the reasons why we're shorting South African rand right now and why we have been for the last 2 weeks. So make sure you check that out. All right. like I said, I wanted to mention the S&P, and I'm gonna leave you with the stock market, because if you go to the S&P, what had happened is we failed above that 4,200 level. Now, a 4,200, as you know, is a big pivot, right? We've had shallow retracements. See how we're nestled above the 50 DMA. We don't want to break below that 50 DMA. It's fine being bullish while we're above that 50 DMA, but if we get below it, that's where the risk starts to build to the downside. Now, one of the key developments of this last week was on Friday, following options expiration, we saw a little bit of a failure right here. And, remember, these debt ceiling talks are ever evolving, and they also are really headline driven. So you could see us break out and launch to the upside. You can see a really big reversal based on comments that are coming through the markets out of Washington. So just keep that in mind, that we're at a very pivotal level, breakout or breakdown. And I don't really want to commit to either direction at this point, because I think that the debt ceiling will be resolved, and when it is, we might actually spike higher. But after we're done spiking higher, I'll be looking to sell the news. So, buying the rumor, as the market is, and potentially selling the news. That's where my head is at right now. But take a look at the NASDAQ. Look at the NASDAQ. We broke out to the upside. We were in a wedge, right? And the wedge broke to the upside. There's 35% chance of that happening, in my guesstimation. Well, we rallied and we broke through. We broke out. Notice the breakout. And by the way, we do have a pretty big earnings next week from NVIDIA, just FYI. Okay. But you got the NASDAQ that's moving higher. You got the German DAX. What? At all-time highs? What? That's right, guys. You got the German DAX in an ascending wedge, heading to that 161% extension, challenging all-time highs right now. You got the Nikkei trying to break out. On Friday, just so you know, the Nikkei touched levels it hadn't seen since 1990. My goodness, right? All right. Some crazy stuff. Well, folks, I want to say, thank you for joining me today. Thanks for listening in. And if you have some comments, or if there was something that I missed, jump in the comments section down below. Let me know. Let's talk about it. I'll be in there checking the comments from you. Also, I want to say, if you can give me a thumbs up, me and my team, I'd appreciate it. If you think that these videos are good for you and they help get you prepared for next week, that's the point. And make sure you share our videos. If you see us tweet about it, or you see us on LinkedIn or Facebook or wherever we're posting these, make sure that you're out there sharing them and liking them too. We appreciate it. And it's a nice thank you for us, for putting together these videos for you free each and every week for the last 7 years, roughly. So anyway, I want to thank you for joining me today. My name is Blake Morrow. I'll see you on Monday morning on the Face Show. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.